Hey, and welcome back to Financial Reactions. Today we're taking a look at the flat tax. I know, exciting tax stuff. But our current tax system is so broken and full of corruption with vote buying. I'm looking for ideas from the people about what would end this. So, this is just the first iteration of the flat tax. So, we're going to cover what is the flat tax, how a flat tax works, why some economists support a flat tax, why some economists criticize a flat tax, and how flat tax proposals differ and what to watch for. So to begin with, if you could, before we get too far in this, hit like and subscribe. I'm doing tax work, that's the least you can do. Just kidding. Seriously, like and subscribe. Okay. What is the flat tax? A flat tax is a tax system where everyone pays the same tax rate no matter how much money they make. Instead of having many different tax brackets, lots of deductions, and special credits, you simply apply one single rate to your taxable income. For example, if a flat tax rate is 15%, then everyone who has taxable income pays 15% of it, whether they earn $30,000 or $300,000 a year. The main goal of a flat tax is simplicity. It replaces the current progressive system where higher earners pay higher percentages with one straightforward rate for everyone. Ideas like this have been proposed by economists and politicians in many countries over the years. Some people like and some don't. We'll look at both sides later, but for now, the important thing is to understand the basic definitions. One rate for all. That's the foundation we'll build on the rest of the presentation. Now that we know what flat tax is, let's look at how it actually works. It's pretty straightforward. There is one single tax rate that applies to taxable income. First, you figure out your tax base. That's the income you actually that actually gets taxed. Some proposals tax almost all of the income. Others might leave out things like savings or investment. Next, many flat plans remove most deductions and credits to keep things simple. However, a lot of proposals still include a basic personal exemption, a certain amount of income that is not taxed at all. This helps protect the lower income families. Because there are fewer rules, filing your taxes becomes much easier and faster. Here's a simple example. If someone earns $50,000 and the flat rate is 15%, they would pay $7,500 in taxes. If someone earns $200,000 at the same 15%, they would pay $30,000. Notice that the person earning more still pays more in total dollars, but the exact same percentage. That's the basic mechanics of how a flat tax operates. No judgment, just how the numbers work. Why some economists support the flat tax. Please remember, there are arguments that support commonly make. First, they say it's much simpler. And it would be. You wouldn't have all the deductions and you wouldn't have all that different forms to file. People can file their taxes more easily and understand exactly what they owe, which also means every paycheck you would know exactly how much you're going to have withheld in taxes and not have to guess each week if you work hourly and get different checks every week. Second, it creates transparency. There are fewer loopholes, so it's harder to avoid paying taxes through complicated deductions. Third, supporters believe it improves economic efficiency. When marginal tax rates are lower, people may be more motivated to work extra hours, save money, or invest. They also point out that with fewer deductions, the government taxes a broader base of income. This sometimes allows a lower overall rate while still bringing in stable revenue. Finally, both individual and businesses would spend less time and money on tax preparation and accounting. These are the main reasons economists who favor a flat tax give for for supporting it. Simplicity, transparency, and better economic incentives. Why some economists criticize it. Again, these are common concerns raised by critics. The biggest worry is that a single rate might be a heavy relative burden on lower income households, unless the plan, of course, includes a strong exemption or deduction, whereas you wouldn't start paying the flat tax until you reach a certain threshold, which is usually above poverty level. Critics also say the revenue is uncertain. Depending on the rate and what income is taxed, the government might collect less money than it does under the current progressive system. Another concern is the loss of targeted incentives. Right now, deductions encourage behavior, like buying a home, giving to charity, or saving for education. Removing these tools could change how people and businesses make decisions. Finally, switching from our current complex system to a flat tax would create transition challenges for families, companies, and government budgets. These are the main points critics usually bring up when discussing the flat tax proposal. So as you can see, there's good arguments on both sides so far. It all depends on what you want. And don't forget, the flat tax can only be used or can be used as a starting point. It doesn't have to be so rigid where everyone pays. You can still have a progressive step system in a flat tax where no one pays on, or you pay like 1% on the first $25,000, and then it goes up in smaller increments to like 75, 150, and it keeps stepping up as you go, kind of like our current progressive system, but it's a flat tax, so you know exactly what you're going to pay in each step. How flat tax proposals differ and what to watch for. Finally, how flat tax proposals differs and what to watch for. Not all flat taxes ideas are the same. Okay, that's what I was leading into. They can vary quite a bit, and here is where they can be really useful. Here are the key things that change from one proposal to another. The actual tax rate. The number right now is suggested between 10, 15, 17%. We'd probably have to go and figure out what the government needs, what the current estimated income would be, and start at that rate. And that would not actually be as difficult as most would make it out to be. The size and type of exemptions for families or low-income earners, that would have to be negotiated. The way business taxes are handled. Right now, they're a mess, as you can tell in the politics. Some claim no one's paying their fair share if you're a rich business owner, and business owners, of course saying they are paying their fair share. And the other plan is designed to raise the same amount of revenue, more or less, than today. I think it, like I said, if you set the tax bracket right, you would be okay. So when you hear the tax pack proposal, here are good questions to ask. What is the actual rate? What income is included? Are there meaningful exemptions? Will it raise enough revenue to fund government spending? Well, our current doesn't do that anyway, so obviously Congress doesn't care about that. And how will it affect different income groups and economic behavior? As far as behavior goes, that's something that can change over time. If you incentivize people to save, they will. If you incentivize people to live on credit card debt, they will. In the end, a flat tax is simply a structural choice about how we collect revenue as a society. Different designs can lead to very different outcomes. So, that's the flat tax in a nutshell. Now, I'm not saying I'm for or against it. I think it has a good foundation and we could grow from there. But as far as for this video, I was wondering, what are your thoughts on the flat tax? Do you know a tax proposal that you like better and not like a general, the rich pay more or these people pay less or blah, blah, blah? I mean, is there an actual named tax proposal? There's the flat tax, there's the fair tax. I've heard some others out there. So what do you think? Let me know in the comments. And thanks for joining me today. Don't forget, once again, to like and subscribe. and I'll see you in the next video. Have a great night.